It takes us to our talk of the tape. How bad is it really going to get? Isn't that what everybody wants to know? Let's ask our panel for some answers. Avery Sheffield of Vantage Rock, Cameron Dawson, New Edge Wealth, Malcolm Etheridge of Capital Area Planning Group. Malcolm's a CNBC contributor. It's great to have everybody here. What's going through your mind? What do you think?
Yes. Yeah, very dynamic time, right? It seems like the markets are hinging right now on Trump and what he decides to do with the tariffs and every country's response. And so, given that uncertainty, we're still trying to look at where's their asymmetry to the upside and the downside. It does look like from the actions today that maybe things will be tougher with China because China's coming back with retaliatory tariffs. Maybe they'll be easier with Vietnam because Vietnam says, look, we want to really play ball. And so I think that things could play out differently by country. And given our exposure to imports in different businesses to those different countries, we could have very different outcomes for those businesses. Are
you looking to buy on days like we've just had, or are you afraid to buy because you're not sure where all this is going, as I said in the intro?
Right. So we actually are starting to see some opportunities both to buy, but also, we run long and short, but also to be continued to be short. And the areas that, we think are most interested are stocks actually in consumer discretionary that have been so beaten up. They're like potentially pricing in tariffs. So stocks that are down to kind of pre-COVID lows from like pre-COVID and more, but still more value oriented because we do think there'll be a trade down effect that we haven't seen over the past few years.
You think a lot of the tariff news, to your point, is already in those names?
I think a lot of the tariff news is already in those needs, and especially when you start to see countries like Vietnam saying we'll play ball because it's so important to them. I think that suggests that we won't have the worst case scenario. But even if we did have the worst case scenario, I do think that the bigger will get bigger. Like the retailers that have the analytics, that have the tools, that have the value proposition, that have diversified offerings from grocery, more staples to also discretionary, will probably be able to take share because this is going to be very difficult to navigate through for everyone.
Malcolm, I really do feel like people are thinking that when you're down, 2,100 points on the Dow now, plus what we did to the downside yesterday, are things beaten up enough that if I'm a longer-term investor, I should? It's easier said than done because the pain feels so bad and you're not really sure where it's going to end.
So when you say longer-term investor, everybody's got their own different version of what that means, right? But I think that specifically for younger investors who are watching this and listening to us right now, this is the market that you've been waiting for. Since October 1st, I think, of 2022, the market's done nothing but go up and to the right, and you probably felt like you missed out on your opportunity to really build wealth the way your parents and grandparents have in this amazing growth engine that is the U.S. stock market. This is the opportunity. It's an unforced error that was handed to us by the U.S. president. And for anybody who's felt like they were locked out of this thing, you look back to 2008 and how many fortunes were created on the back of that great financial crisis. I myself graduated into that, so I had $10 to my name and missed that opportunity. This is similar to that for those folks who are looking at this. Very good quality names that have fallen off of highs by numbers we can't even calculate right now because the numbers keep bouncing on the screen. This is your opportunity to ignore the noise and the red on the screen, to your point, and get to buying.
What are we waiting for, Cam? Are we waiting for the president himself to capitulate on this, to the so-called Trump put, to not be able to tolerate this kind of carnage in the stock market any longer? What is the moment?
We are hearing this constant refrain of a hope that you're going to see Trump back off. And maybe that's one of the reasons why we still continue to see this weakness in markets, because there is still that hope that maybe you won't see the follow through. I think it's also really interesting. We heard from Powell today. The Powell put is off the table. The Fed is not seeing this as a reason for them to step in and ease policy. So it really puts the put in Trump's court. And the question is, does he see this as a fundamental restructuring of the U.S. economy, which means that the tariffs are going to stay, or does he see this as just a negotiating tool to get some wins? It's a big, huge question mark, but probably the ultimate question.
Yeah. What do we think about the idea of a Trump put? I mean, we came into this year and after the election thinking, well, this is a man who cares deeply about the performance of the stock market, and his rhetoric over the last couple of days would suggest that not yet. Right now, maybe he doesn't. He's at his golf club. He's doing other events. He said things are going great, and he says things are going to work out. There's no sense from at least the president yet that he's had enough of watching his screen.
Right. Well, I think he said earlier this year that he's really focused on the bond market. And I think he's over the moon about the 10-year below 4%. Right. So he really wants to get interest rates down because interest rates coming down is going to meaningfully lower the cost of our deficit. And also it's going to spur demand. I mean, today you saw the home builders were actually up. Well, they're up actually for a legitimate reason. If you get interest rates down enough, you even had auto dealers up today, right? You can have these terrible auto tariffs, but if you're a dealer that can sell all different brands, sell more American-made cars rather than non-American-made cars, and interest rates go down, that's positive. So I think he feels like interest rates coming down and oil coming down are the two most important factors to drive more sustainable economic growth over the long term. And it does seem like he really doesn't care about the stock market in the short term. And to your point, I think he really wants to give those investors who've missed out on the stock market, the 50% of people who don't have money in the stock market, or younger people who've missed out on this opportunity, the opportunity to get in at much lower prices. I think he's fine with everyone who's made a killing to have to suffer and have a redistribution of wealth.
Well, he's